This is the Daily Market Comment by Rafi Boyadjian. I'm Maria Pachordes. Thanks for joining us at XM.com. Markets were generally trading sideways on Tuesday as investors pondered central banks' next moves amid conflicting signals from the latest data and a bank holiday in the United States. Trading in July initially got off to an optimistic start after last week's data fueled the risk rally in stocks. But it seems that the calls for a recession may not have been premature after all, following yesterday's dire manufacturing PMIs globally. The biggest shock came from the ISM manufacturing PMI in the US, where the closely watched gauge fell to its lowest since the pandemic slump of 2020, raising doubts about the Fed's intention to hike interest rates by at least a couple more times this year. However, with the June jobs report coming up in a few days' time, and U.S. traders off celebrating Independence Day, Fed fund futures barely budged, as many investors are sitting on the sidelines. On Wall Street, it was another case of bad news is good news, as the main indices edged higher, extending the prior week's impressive gains. Even the U.S. yield curve inversion, deepening the most since the 1980s, doesn't appear to have frightened the markets. That could change, however, if Friday's non-farm payrolls number beats the consensus estimates again, as it would boost expectations of the Fed unpausing in July. Interestingly, it was the US dollar that reacted the most to the poor ISM data, reversing lower after earlier gains and trading mostly flat today. The greenback softness is likely helping the Australian dollar to recoup its losses after it tumbled from the Reserve Bank of Australia's decision to keep interest rates unchanged. Policymakers maintained a hawkish bias in the statement, although on the whole, it seems the RBA is nearing the end of its tightening cycle. Commodity markets were also having a lackluster session, despite a surprise announcement from OPEC Plus on Monday of fresh supply cuts in crude oil production. Yet oil prices fell back after a brief spike, and although they are edging up today, it appears that the sluggish demand outlook continues to outweigh concerns about tighter supply. Meanwhile, growing jitters about a recession and a somewhat weaker dollar are likely aiding gold's recovery from last week's 3.5-month lows. This is today's Daily Market Comment. Thanks for joining us at XM.com.